All right, slight change of plan for this video. I had originally planned for it to be a YouTube live, but for some reason YouTube are not allowing me to live stream just yet. I have to wait 24 hours. So anyway, the show must go on. So yeah, my name is James and I'm a forex trader, and basically this is the first video in a series of breakdowns where I look at the trades I've taken over the last week, and then I look to the future week and just run through my charts and explain a little bit about what I might be looking at and what I'm looking for. So yeah, this video is going to be totally off the cuff because it's the first one I've ever done. And yeah, you just have to bear with me a little bit. I am a trader, not a YouTuber right now. So yeah, I'm just still familiarizing myself with some of the tools. Anyway, if I do this, you should see my screen, and this is basically what we're looking at in this video. So as I said, I'm going to take us through the trades I've taken this week. I'm going to explain why I took them, look at the week ahead. We're going to check the news just to see if there's any fundamentals that we think might help price get a move on. The way I trade is purely levels based, so I'm looking for price to move into a strong daily level or an intraday level, depending on whether or not we're trading offensively or defensively. And the way we decide whether or not that's the case is by looking at the volatility within the market that week. So if we've got a particularly volatile week, then we're going to be trading rather defensively. Whereas if things are a bit slow, that's when I tend to day trade more often. And traders usually fall short of making profits because of this. They don't understand why one week their strategy worked and the next week they just got absolutely smashed and their asses handed to them. So we're going to be looking at that and then how it applies to my technical analysis for the week. And then at the end of this video, if you stay right to the end, I will be sharing with you a very special gift. Ooh. So anyway, if I click this button now, let me see, you should see my my trading history. I can't actually put my hand over it. That would be awesome. But basically, that's what we're looking at. So we're going to go through those trades. Where you see repeat pairs, that's basically one trade for me. And I'll explain how and why that works. I'm trying to move into the shot. Yeah, so we'll be looking at pound CAD trade short, euro dollar long, pound dollar short, pound Swiss long, and I'm going to run through the Aussie dollar one live because I did just cash that one out on Friday, and I've left what I call a runner going on that one. So this is where I cash part of the trade. I usually cash a big chunk of it, so 80 to 90%, and then I leave either 10 or 20% running to catch a potential reversal. So as I said before, my system kind of works levels based. So if price moves extremely strong into a level, I'm looking for a pullback. So the idea is that if there's momentum in the market, at some point traders have to take profits. When they do, you get that slight pullback in the market, and we want significant levels so we actually get a decent pullback. At the same time, these pullback areas can be reversal points. So why I leave trades on, like a small partial running, is that if it is a particular reversal point, which I got no idea if it's going to be, and neither does anyone really, but if it is, that runner can basically act as a way of cashing even more profits from the trade. And it helps me with my greed psychology, because I know that I've got something running on that pair and I can still adhere to my rules, meaning I can take profits where I'm supposed to and not hang on for a bigger or a longer trade just because I feel like I deserve it. That's one of the best ways to ensure that you will fail miserably as a trader. So without further ado, let's get into looking at some of these trades. I'm going to start with pound CAD and work all the way back up to Aussie dollar. So I'm going to flick into my screen and then I'm going to switch to trading view. Actually, I'll tell you what, we're going to go into Notion first, where I actually do this. And this is something that I actually recommend everybody does, and that is journaling your trades. So pound CAD, I've got a before and after, right? So let's look at the before. I'm going to, let's see if this is going to play ball, full screen this. So I think if I just do that, hit space. Oh, there we go. You can, all right, sweet. So sorry, I've just got some things on my screen that are blocking what I'm looking at. So basically what we're looking at here is pound CAD, and this is the weekly view. So as I said, I'm looking for strong levels. So what you see here is a very strong weekly level across the top. Price has been kind of drifting towards it, and then we've had this impulsive move from the level here where we've pushed up, we've consolidated for about a week, and then we've pushed up once again. And I'm fully expecting that level to get hit, and we will see a reaction from it. Why? Because that's usually what happens. It's not rocket science. If we look at the daily, this is just slightly more zoomed in. So we can see again, we've had that push up, and then basically the last, so that was the push up, then we messed about a bit, and we're starting to push up again. But we are starting to show signs of reversal, as this price action is typical of slowing down and reversing. So, and then lastly, we'll look at the 4 hour. And the other thing I've got on the chart here is ATR. So this is average true range. And this is just something that helps me also during the day to work out how much price has moved. So if price is between this high and this low, we know that price hasn't really moved significantly enough for us to be interested in the trade. And that's really important to know, because that'll keep you out of really shit trades that are likely to just smash through because there hasn't been any momentum yet for you to actually take profits from a pullback. That's why I like to see a strong move into an area before actually getting involved, which means less trades, but it means a whole lot less stress. So there we are. So yeah, this is the last screenshot before price actually did. So what I'm pointing to here is this long wick, and this isn't the best trade for me, to be honest, but I thought the level had a go at, just because it was such a strong weekly level. The opportunity here, I thought, could have been more. It could have been 40 pips if we were looking at this area down here, but I was just very aware of this wick. I think there was also some element of timing as we moved into this. I think from memory this was later in the day. And so with that going on, just, you know, adhering to my own psychology and how I feel about entering trades, I just decided that I would take the 22 pips. And what I did is I ended up cashing my, I think, let me just pull this up. I cashed 80% of the trade at the 22 pips, thinking that price would go on because of where it was and it being such a strong weekly level. So if we look at that pound CAD, that was this 240 lots here on this 100k challenge account. Oh yeah, I'll get into that as well, why this is a 100k account and what's going on here. I have multiple accounts to spread risk, and I use a copy trader to copy from one account onto the other. So whilst I'm using one as a control account, what you see is like these trades here is basically being used as the master, because it's a brand new 100k, which sets the risk at 100k for the week ahead. And I'll explain a little bit more about that later, but that's kind of why we're looking at these numbers. So anyway, yeah, that was the 240, and yeah, there was I think there was 22 pips exactly taken from this trade. I don't know why it doesn't show it here in CTrader, but it should. That would be a nice feature, but anyway, not the end of the world. So going back to it, yeah, that was the pound CAD before. So let's just go and close that up. And now we're going to the after. So what are we looking at here? Price came in, literally just tapped my level, and this is the 1 hour chart. So we were sitting in it for 1, 2, 3, and in the 4th hour, we decided that we would head down, and like I said, that that top there where we had that arrow pointing, that's where I set my first target, where I cashed 80% of the trade. And if we go and look at this again, you'll see later on that the 0.6 that was left on, so that was 20% of this trade, came back for a break even. So it was just stopped out basically. So if I hop back to it, I think I show that here. Yeah. So price did drop. It did drop and do the whole, it did do a lot more, which was nice. It did about 45 pips in total. But then pretty much the next day, it just turned around and just shot back the other way. So as it did that, I'd moved my stop loss not to break even, not ahead of it, but just behind it. And yeah, it just ended up knocking me out there for like $1.60 or whatever it is. So that's what happened with that one. But hopefully you can see that that's basically a very simple trade. Yeah, pretty textbook really. A nice way of making sure that I cashed some of my winnings. If I hadn't, obviously, you know, if you do a typical sort of YouTube guru trading style where, you know, you set your stop loss at 1% or whatever, you just end up getting smashed from stuff like this. So I like to not really use a stop loss. I do use a stop loss, but I call it a weekly stop loss. It's the amount that I'm willing to lose in any given week. And it will typically be about a week's worth of profitable trading. So I just accept that, and history has shown me from my own personal trading that my win rate is high enough to not get hit by stop losses. In fact, if price goes against me, I will quite often just go again at the next level, and I'll usually go a bit harder, and I allow for that in my risk management. So if any of that is not quite understandable to you right now, that's totally fine. I will be doing other videos where I go into that, but basically, yeah, my view is if you're somebody that uses stop losses in the typical sense, you know, setting within 20-30 pips, you're just going to end up dying very slowly. And if you're watching this right now and you've been struggling with trading, as in you've had some success, but then in the end it always just never ends well, this is probably why. So anyway, we'll get into that, but yeah, let's hop back into what we're looking at here. I'll try and go a bit quicker as well. I don't want this, I don't, because I'm not doing this live, I can't get any feedback, so I don't know if this is interesting, not interesting, boring, whatever. But if I was just starting out, this would be something that I would definitely benefit from if I sat down and paid attention. So Euro-dollar long, this was on the 11th of June. Let's take a look at the before. This is also my first time doing this as well, so I'm getting more used to it as I go. Yeah, so here I've actually got my first and second entry on here. So as I was just saying, I don't actually use stop losses in the traditional sense. So let's say this is the weekly view as well, by the way. Let's say my first entry just got smashed. 70 pips below is my second entry, and I will hold that first trade the whole way back. I'll just eat that loss because the trade's still running and I'm still expecting a reaction. And it's all relative to what happened that day. So obviously if you just hang on to a trade forever and ever, that's not a good thing to do. That's not what I'm suggesting you do either. I'm just saying that if you're going to take a trade at a particular time of the day and the level gets smashed, well, that just makes the next level even more likely to work or even to be a reversal point. So that's my point here, is that I will use a backup entry, and I've always got a backup plan. If something goes wrong, I want to know already what I'm going to do next if the thing that I thought was going to happen doesn't actually happen. So yeah, that's just another point to make, very important. So anyway, that is the weekly view. I'll quickly look at the daily, which is basically just the same thing zoomed in. So you can kind of see that we've got this wick here, which is actually refined to the 4 hour, which I'll show you here with a bit more detail. So what we're looking at here is Same thing in the daily and the weekly, first entry and second entry. There's about 70 pips between these two levels. And over to the left here is just a bit of trade planning, so where I'm going to take my profits. So like in pound CAD, we've got these wicks to the left. And I think that that is the first area that price is going to struggle once I enter this trade. Now, that's important to know because I want to cash my profits as soon as possible. I also want to maximize them so that the trade opportunity is still worth it. And here I can see I'm going to get a solid 30 pips from this move if everything plays out the way I think it will. And if it doesn't, well, I've got my backup entry lower down where I'll go twice as heavy, still within risk management. I'm not risking, a large amount of my capital here. Again, I'm just relying on the trading history that I have and what I know to work. So anyway, price was about 115 pips away from the first entry at the time of spotting this trade and potentially looking at it. So we'll go ahead and close that up, and now we'll look at what happened. So what happened? Yeah, this one was interesting actually. So I don't remember the exact day this was, but we had a gap. And the thing about gaps, this is this area here, right? So first of all, what I'm trying to highlight here is that the previous day, average true range, which before is what I was saying is essentially, it's essentially like how much a pair is going to move in a given day, was breached. And we still didn't have a pullback, and we had this big gap down to here. So I decided that once I saw price continue down and not immediately fill the gap, I was going to take the level below. The reason being is because most gaps want to be filled. That was my thinking here anyway. So yeah, that's the first part, but this is actually the miss. So if you see this, price came down, my level was just here, my entry was a couple of pips above, just to ensure that I'm not missing it due to spread. And I do that with pretty much every trade I take. Some of the more exotic pairs like Aussie, New Zealand, I'll actually go like maybe 4 or 5 pips early. Just depends on how much opportunity there is in the trade, whether there's enough pips available for that. Yeah, it slipped me and it went off and basically pulled back more than 30 pips anyway. So I was kind of thinking that the trade was done, but for a reason which I won't go into in this particular video, it's slightly outside of the scope, but I decided to hold this as a trading opportunity. So I actually left my pending order on here, and price did actually come down and tag me in. I think we had maybe 6 or 7 pips of drawdown here, I guess nothing. And then price pretty much moved away and hit the first area of potential struggle that I had mapped out within a matter of, I don't know, these are hourly candles. But anyway, the price worked. And this is another thing to remember. Once you do your analysis, just because you're sitting in a trade for what seems to be like forever, it doesn't mean that the trade isn't going to work anymore. And this is again why traders close their trades too early. It's because they can't stand the fact that they see price moving up and down and is it, isn't it, which way is it going to go, is it still going to do what I think it's going to do, it's taking too long. The market doesn't owe you anything, right? And this is what it will typically do to shake you out and make you close your winning trades too soon and let you keep your losing trades for as long as your stop loss is, right? So yeah, just a note on that. Once you've done your analysis, you sit on your hands, and unless something fundamentally changes in the charts, or mostly just in the charts, that tells you, okay, my idea is no longer valid here, you don't make any changes because you've already done the analysis. The thinking you do before, the execution you just do as you're following through on what you said you were going to do. So anyway, this trade was nice, went straight to APS, and as you can see here, this was a nice example of when you leave a bit of the trade on. So I took 80% of the profits here, and I took the other 20% of the profits once we'd hit 80 pips. I was looking at this inflection point to the left here as a potential area of struggle. We'd also pulled back, I think, about 38%, which is usually where some pairs like to struggle from a Fibonacci technical standpoint. I do not use Fibonacci's in my trading analysis at all. Typically, I just use levels. That's it, levels and price action. But in this case, and trying to work out where to take profits, especially when you've got like a trade running a good number of pips, it's like a non-emotional, logical way for me to just go, that's where I'm going to take the second chunk of profits. So I did that, and that basically resulted in this initial euro dollar trade. So the 160 lots was cash, that was 80% of it. And then you can see the other 20% left on was cashed just after the pound CAD got stopped out. And that basically doubled this trade almost. So we went from 467 in profit to 316 just from running 20% of the initial value and letting it run and then taking it later. So I love to trade this way. I feel like it keeps your greed at bay, and yeah, sometimes you just get stopped out for break even, but other times you find like a decent run and you actually, you get 100+ pips. It really stacks up, which I'll show you on a current live trade in a bit as well. So anyway, keeping the energy up and making sure that I'm not boring you to death with this stuff. We'll hop back into this and continue with the trades covered because we've only done 2 and we are currently running 21 minutes, but the next lot I'll do pretty quick. So pound dollar, let's have a look at this one. Pound dollar weekly, we kind of had this huge move down from before, big recovery, move down, push up, pull back, push up, pull back, and then slightly pushing back up again. If we pulled up to this area again, where we've got the candle body close, I would become very interested in taking a short from here, just because we're going to see at least some reaction, right? And that's the idea. If price moves in a strong way in a given day, you're going to get a reaction from these strong levels. And if you don't, the backup level will work if it's, if it's within the day. So it's important to remember that that is how the strategy works. So next up, you have to bear with me whilst I'm clicking around and trying to do stuff here to show you what's on my screen. This is the daily, nothing more to really look at here. The upper level isn't really a second level. It's not what I would call a backup level because we've got this wick. So daily body candle close, a wick to the top. For me, that's nothing really. It was 23 pips, I think, from the candle body close right to the top. So I just disregarded it and thought that's a strong level. I'm going to go on the candle body. Which I'm glad I did, because you'll see why in a sec. And I've seen it happen so many times where traders try to go on the wick and the wick is just never even tapped into, and they wonder why they keep missing all the good trades. So that's the 4 hour, I believe. No, sorry, that is the daily. This is the 4 hour, sorry. So the 4 hour looked like this. Yeah, I saw potential 40 pips in this one. As you can see, again, we've got this wick here. I think price would start to struggle if we tapped in here and pulled back. We were a good 100 pips away from the level, so a strong move in was still possible. And yeah, let's have a look at what happened with that one. So the after effect of this, price had a really, this was just a textbook trade, right? This trade was delicious. We came in on a strong move. We didn't really hang about there for too long at all. We moved away within hours, and once we got going, we really got going. And like I thought, this was the exact point in which pound dollar decided it would struggle. We had a small pullback here, probably about 10-15 pips, I think. I'd already taken my profits here, and that's reflected in this one here, so pound dollar. So there was 640 taken off here. And yeah, this one's really quite interesting because there's where I took the 40 pips, and then this is basically how we're shaped up today. So I'm still in this trade. I've got 20% running, and we're now running over 214 pips. My target with this is to see price come all the way down here, at which point I will keep it. I'm not gonna cash it at this point, but what I'll look to do is take another trade from this level, and if the trade works, I will cash it, and then I'll probably end up cashing another 10%. So 50% of the running trade I will probably cash just to see what happens with price from there on. Or I may end up just cashing the full 20% that I've got running on pound dollar. It really just depends on what I want to do with it. I would have made more money on this trade moving the other way. And the other thing is, it's an insurance policy if this level doesn't actually work. So let's say, and that's why I've got my second area of potential struggle down here, because if price slips this level, as in it pushes down, not slippage in terms of brokerage slippage, but if we push past this level, I don't really mind too much, because I can just take a loss on that trade and then cash some of my runner to cover it. I'd rather not do that, but it is still an insurance policy if that did happen. Like I'm not counting on my runners to add the profits to my trading P&L. They're used primarily just for bonuses, and sometimes they can be a lot. I just like having them running. I think it's cool. So, zoom in like that. Didn't know I could do that. So yeah, that's pound dollar. And what's next? Pound Swiss. So pound Swiss was actually last week. Let's take a look at that. Again, quite clear here. We'd had this kind of move up on the weekly, pull back. This was the level, and then an impulsive move off there. So this level that had quite a lot of momentum behind it, therefore it makes it significant for me. And if we dive into this one here, this is the daily, so you can also see that we've had kind of a strong move down, some consolidation, and then continuation down into this level potentially. But we did pull back slightly from here, probably something to do with dollar strength or something like that, because there's nothing technical here really that would suggest a pullback. We have got this sort of head and shoulders formation forming, but again, I just trade levels. That's it. Everything else you've learned in trading or heard about, you don't need that. And I'm not trying to be obnoxious or even disrespectful to other people's trading styles. I'm just, I have trader friends who trade completely different to me. We have a bit of banter. I tell them they're stupid and wrong, and they tell me the same. But at the end of the day, we can all trade however we want. I'm just trading the way that I think is most stressless, like it's just easy. And also, because it is that way, I just feel like it's more beginner friendly. And it also teaches you to be patient and not take too many trades. So for that reason, this is why I'm really kind of bullish, excuse the pun, on my trading strategy. So that was the daily, and this is the 4 hourly. So you can use my zoom in tool now. That's cool. So over here we've got these wicks laying about here. So again, they didn't look too friendly to me, but we can see the last time that this level worked was here. We had a push in and an immediate rejection, and that was about 28 pips, and that's what I ended up taking on this pound Swiss trade. That's up here. So sorry, here 51521. So that was 160, and you can see I've also had the runner going on this one, which I made a mistake on, which I will confess. I ended up taking a break even. I would call that a break even though it's green, it's insignificant. So I took a break even because I was stupid. But the main thing is I learn from my stupidity sometimes. So going back into it, let's move across here. 28 pips, was a winning trade. First entry was here, and now let's look at what happened. So just like before, that we just looked at, in the historical performance of this level, we had average true range, which was this line here, you can see, it was breached, so it was perfect for this level. I had my, actually, tell a lie, so it was breached the previous day without a significant pullback, that's right. So then price pulled down, and the reason that this this level here, which is my previous entry, is now showing red and as a stop loss, is because what I did on this is when price came down, I did my usual thing, which we can see here. So I took my usual trade and entered at, I don't know what that would have been, two lots I think here for this 100k account. Price shot up and hit my first area of potential struggle. I cashed my 80%. Then what happened is I decided that I didn't like some of the things I was seeing on the pound, and I would just, I have this thing with Swiss pairs as well. I don't generally like to trade them. This was just a nice level, and price action into it was quite clean. You see this impulsive move down, bit of a correction, and then another smash down into it. So I like the price action. I really hate the currency pair. Typically the Swiss pairs move really slowly, and I like to be in and out as quickly as possible. Usually like a few hours ideally to get in and get out for me is better, just because I like to be able to take other trades in the market if opportunities present themselves, and it's just good not have to be thinking about a trade. So again, like my big thing, the more videos you watch of mine, is on protecting your psychology. I think first of all you protect your capital, but as importantly you also protect your psychology so that you're able to come back tomorrow and be a better man or woman, and not be a smaller, more fearful, more beaten individual. So anyway, I moved my stop loss to break even here. Price came all the way back for another grab, maybe some liquidity grab here, which is basically when the market pulls back, just to think of it like a slingshot. It wants to go further, so what it does is it pulls back even more to build some momentum, and that's exactly what happened here. So when I saw that was a bit annoying, but again, it was a break-even stop loss, so I can't really complain too much about that. It was fine. Nobody got hurt. There's no need for any tears. Just my trade management on that one. That isn't what I would typically do. What I would typically do is put my stop loss. Actually, this is a good point to mention here. I would put my stop loss under the previous low and under the level. So I would keep it tight just so that I don't have to unnecessarily take a loss if this isn't a reversal point. But I don't mind taking a few pips, or 5 to 10 pips in a loss, plus the trade is now 20% of what it was. So it's not going to be the end of the world, because price very often does this where it pulls back from the original entry to grab some more liquidity to go further than it previously did. And it really went. So if that was 30 pips, that was 60, that was 90. So, and right back into this area. My second target on this would have been exactly here. So we would have been looking at another 80 pips. Very similar to what I did. Actually, I'm not sure if you've been seeing any of that. That's my bad with my YouTube controls. Sorry. So yeah, this is what I've been talking about. Price pulling back here. I had my stop loss, this red line, and price just shot up. So where that's 30 pips, that would be 60. That would be 90, and I would have been aiming for somewhere around here, which would have been 80 or so pips. Very similar to what happened with euro dollar here, here and here. So it took almost doubled the trade. So that would have been even nicer because it was a bigger trade. But is what it is. Is what it is. So anyway, that's the thing. I'm not on a live here, so if I'm stuck on like one screen, nobody's here to tell me that I'm being stupid, so do bear with me whilst I get used to these controls. But yeah, so hopefully that makes sense. I think that's all I wanted to show you on pound Swiss. yeah, so what are we coming up to now? We are at 34 minutes, which is actually not too bad. So those are the trades taken so far. At this point, I would be asking anybody in the comments or to comment any questions that you might have about this. So I'm going to take that opportunity right now just to say it. If you do have any questions about anything that I've mentioned here today, please just drop them in the comments below. Also, do not forget to like and subscribe to this video. If this video has helped you in some way or helped open your eyes to potentially an easier, better, more stress-free way of trading, also drop a like and let me know in the comments that that's helped you. It helps me. I don't get paid anything for these YouTube videos. I am a trader. The only thing I do benefit from is actually going over all my stuff each week. Does help me become better, I think, and I encourage you to do the same. So yeah, me sharing this stuff with you, it helps with my psychology as well. But other than that, like, I don't need to be doing these videos other than to, you know, share my thoughts on it. But if I can help somebody, I genuinely really would love to know that. So yeah, subscribe and drop a comment below. So moving forward, I do have one more trade here, and that's Aussie dollar, which I'm going to cover live, apparently. I've made a note here, which I will show you, rather than getting stuck on me. So Aussie dollar is going to be covered live. So I'm going to go ahead and jump over to my charts, which we are stuck on pound CAD from what I was charting up, just to going over the week and documenting my trades. I'm going to turn off ATR, and we are going to go to Aussie dollar. So just a quick note, I have all my pairs listed here. I segment them by pound, CAD, euro, Aussie, New Zealand, dollar, Swiss, and metals. And then underneath that, I've got my indices. So I'm keep a keen eye on the Dixie. As you can see, my analysis is playing out here. I watch the stock markets in the US, so the US 500, the US 30, the UK 100, the German 40, and the all-important Japanese stock market, the Nikkei, which is crucial if you're trading yen pairs. I do not and have not traded them for, well, I did have an Aussie yen trade in May, but other than that. And the other one's oil, just because I do like trading the CAD pairs, and oil tends to be something quite significant that acts as a confluence for dollar CAD, Euro CAD, Aussie CAD, any CAD pair basically. And then the classics, Bitcoin and Ethereum, because, you know, we all want them to moon. But going back to it, Aussie dollar. So here we go. Welcome to my nightmare. It's not a nightmare. It's just one of these things that happens and that you have to deal with trading this strategy. So this looks pretty messy on the weekly. And why it looks messy is we've got all these long wicks here, and we've just been going sideways for what I would say is a bit too long. You can see usually we've got some sideways movement here. Here we had a nice impulsive week, impulsive. That's nice. But what we've got here is not a place really that you want to be trading. I was perhaps a little bit, if I'm being honest with myself, a little bit more, not even overconfident, but I've got a running trade on pound dollar, and I'm using that as an insurance policy to, let's say, take some higher risk trades that I think will play out, which is completely fine to do. Again, as long as you're trading your strategy, which is essentially making sure that price moves in a strong way into your level, and there's enough room for a decent pullback, and there are enough other confluences, like let's say some other pairs, like all the dollar pairs are moving towards a level. That's another confluence for you. So as long as you're trading the strategy, it's absolutely fine. There will just be slightly more higher risk setups because the level isn't as strong, but it doesn't mean to say that you're not going to get a reaction there. So what happened was, if I put ATR on here, yeah, this is where, so it was Tuesday, and we had this strong bar into the level here. And the level I had marked up was just a intraday level where price had pushed down, pulled back, and it had been used as resistance. But then price had moved off it in quite a strong way as well. So I decided that that would be a level that I could trade. We were also at ATR at that point. So in the day, now I can make this any clearer, but we pushed right up and I thought we were going to bounce off ATR. So my level was right here and my entry just here. But what happened was we did have the pullback. We had it same day, but it only pulled back 8 pips. And I kind of scoffed at it. I was like, that's not enough for me. So, which is fine because again, I'm waiting for price to react. And with this, guess what? I had a backup level, which was the end of the zone, and I was fully aware of this wick right here. Now, I didn't actually enter again up here. I should have done, but I didn't. And the reason I didn't was because I was off screen at the time. My notification did go off, but honestly, I didn't want to deal with it at that time. And I also thought, well, price is actually still going to do what I want it to do. I'm covered by my pound-dollar trade. And I was fully aware of this wick when I entered at this level down here. So all of this is still my trade working. Unless we breached that wick and went higher, at which point my actual backup level was going to be up here. And the reason it was up here was because it was 50 pips away from my original entry down here. See, so I think 43 pips away. So very, very comfortable being in this trade. Just got frustrating, but there's a difference between being frustrated and being uncomfortable as a trader, right? So my backup was going to be here. And if we breach that level, well, I'm sorry, but I'm just wrong, right? And I can be wrong because after that, I've got nothing until like up here somewhere. So that's, hopefully you can see my logic in why that is extremely comfortable for me. Wasn't interested in taking one here because that wick was only 18 pips. So just to go into a bit of drawdown, 18 pips of drawdown is absolutely fine for me. And then you can actually see that this wick here, tell the truth, I was originally targeting this wick here, but this one couldn't be ignored, and I'm glad that I didn't ignore it. But it did mean that if price had just bounced off here and not had this further pullback, I probably still would have targeted the lower one, which would be down here. But because it didn't, I decided, you know what, the move is from here, and the move is a good 30 pips. So the fact that I got in here, the market doesn't care where I got in, right? I now have to trade what I'm seeing. So I ended up taking about 14 pips on that one. That was it. That's all I took. And that's absolutely fine. I'm not too bothered about that because at the end of the day, I did not anticipate, well, I didn't care that price didn't go or work exactly from where I wanted. The fact is the trade worked, the pullback happened, just I didn't get the best entry. And that's just something you have to accept. So that was this trade here, Aussie dollar. Other thing to note on that one is I still have the runner. If you see, I entered that one at 3 lots like I did on this pound CAD. So I've already taken the 240 and I've got the 20% running on this account. So again, taking only, what is it I said, 14 pips or so? Not the end of the world, because if price continues to come all the way down here, I've still got the runner going. So even though it was only a small trade, I take, yeah, just $300 off it. It was smaller, but if it continues down, great. If it doesn't, whatever, I'll take a break even on it, no worries. So hopefully that explains, again, a little bit more about how I approach those things. And yeah, That's pretty much all I'm going to cover, because we've been through all of the trades. Yeah, that's the whole lot. So what I'm going to do now is just what I would typically do when I'm running through the markets on a Sunday. And I do this to ensure that when Monday starts, I'm in the best possible frame of mind. I know exactly how the market finished on the Friday, because I'm not sitting waiting for market close on a Friday, watching where everything ends up. Usually on a Friday by 4 o'clock, I'm gone. Like, I'm not even looking at the screen anymore. Sometimes even the morning, depending on whether we've got NFP on that day. But what I'm trying to say here is that if you do Sunday analysis every week, you're starting the week knowing where all the pairs are, and you know what you're looking for during that week. And if you tell yourself you're only going to enter or entertain the idea of entering trades that actually you spotted on the Sunday, you'll do a whole lot better, especially if you're someone that likes jumping into trades randomly. Like, you just got to cut that shit out. So I will just go through each pair as I usually would, and just mark up anything very lightly and sort of say what I might be interested in. So we will start with looking at the news for the week. And why I do this is because I want to know if there's anything potentially happen that could turbocharge, and that's what I say that news is. I think news just turbocharges what the chart's already telling me, but you have to be aware of it. But nobody knows what's going to happen on an interest rate decision. Nobody knows what's going to happen with inflation numbers. Anybody that tells you do is just full of it. So looking at the week ahead, we've got some light New Zealand news tonight at 11:45 when the markets will be open. Bit of CAD. We're only really looking at the red stuff. So anything with a little red mark here, that's high impact news, or at least that's what Forex Factory determines as high impact news. So we've got a speech which will affect the CAD. That's at 6:45, so we can just be aware of that if you're in any CAD pairs. We've also got CAD CPI on the Tuesday, so be aware of that. Dollar consumer confidence. Then we've got Aussie CPI, so that's the consumer price index. That would be nice to maybe move Australian pairs out of this horrible weekly range that I was showing you they've been stuck in. On Thursday, we've got Governor Bailey speaking, so that will affect the pound. But in terms of like news, that is all I will look at. It bores the hell out of me. I'm sure it does you too. Or maybe you like it, I don't know. But anyway, I will just look at these things and be aware of like what's going on. But in terms of like fundamentals, this looks to me like a pretty quiet week. Like no real bank interest rate decisions or any huge things to be on the lookout for here. And we are entering the final week of the month, which could mean if we are moving towards some strong levels, we should see profit taking, which is essentially any big players in the market looking to take profits and close them for the end of the month, which can mean reversals or bigger pullbacks. So plenty of opportunity, and definitely a trading week, but you might not want to trade the final days. I think the start of July is on Monday. It's the 1st of July. So Monday is probably going to be a bit mad with things moving around, but we shall see. So, what do I want to do next? Let's hop back into the charts, I think. That's going to be the best thing. So I want to do that. Yeah. Right. So first of all, we look at GA. And you can feel forward to, I'm not going to say a whole bunch of stuff Right now I'm just going to literally go through the market and see if there's anything that I'm looking for potentially. So I'm going to go ahead and take ATR off because it makes everything look horrendous. GA, got this level down here. That's where ATR was on Friday, but when the market opens it will have moved. But still, that for me is a nice level. If we look at where everything else is, we haven't been there since 13th of May, so we're a good sort of 6 weeks past that. It's also been used many times before. We could react off the level before, but if we do, whatever. I'm not really interested in that level at all, just because we had price come really close to it within 10 pips, 7 to 10 pips. So yeah, and I think if you look at this before, we sat around here for 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 days without really doing much, which is again why I want to be in and out on the first area of potential struggle, so I'm not sat in a trade thinking, oh my god, I've got my full risk on the table here. And remember, I'm not using stop losses, so I want to make sure that I'm in and out, cashed in most of it, and yeah, this could be a nice reversal point. I mean, from here we moved 300, 400 pips up off, and from here we did the same. So wouldn't be surprised if we got something similar. So yeah, lower entry on the pound Aussie, really interesting area. That's the 189 level. It's also a round number, which is another confluence. So 1.890000. GN, I'm not really interested in doing much on this. It looks pretty, I mean, we're just like doing this rangy consolidation thing. This whole area here looks disgusting. For me, if we saw this area get hit around the same time as GA, so that's this one. So if we see that and we see that at the same time, I would be very interested in taking a trade there. And I'd probably take GN just because it's got more room. And by that I mean, if we look at this, we've got that wick there, that's 66 pips away from my preferred entry, whereas GN, we've not come anywhere near it yet, and that could change, but we're 186 pips away from it. So for me, it's got more trade opportunity. There's a bigger area for it to pull back, and that's why I'd be more interested in it. Pound dollar, I've got a shitload of stuff written all over the place from my analysis earlier to show you guys why I took trades. Just delete and clean up some of that. I've got the runner running on this. We've breached this area here. We did close above this wick, so price action could, I think price action is gonna do something like this. I think we'll still pull back a little bit, but then we're ultimately gonna push down. And I think if we saw something like that, I'd be looking at a nice trade off at this level. And why that level? That's where we had the big move off last time. It's just going to depend like how price gets here. If price is like here and average true range is down here, I'm not going to go for this level. I'm going to go for the one level down. And the way I'm going to find that is, this is the daily. So first of all, I've got that candle body close on the daily there. So it was used there, it was used there. Then I would drill down on the 4 hour. And I'd adjust it slightly to where price moved off of. And for me, that would be that candle body close there. And then if we measure down to the wick, there's a 30 pip wick there. So if you wanted to, you could whittle it down to the hourly. And you could refine it even more to a candle body. Lost where I am now. But pretty much that's the, you see, that's fine. So I'm going to stick with the 4 hour on that one. That's more than enough. And if I see a 30 pip drawdown, I'm not going to cry, because I know that's likely to happen with the fact that we've got a long wick there. But I found the level within that wick, if that makes sense. So if this level gets breached, we'll be taking this one all day long, and then failing that, I highly doubt we'll get down there, but if we did, what day was that? It's 22nd of April. If we did get down there, that would be a very strong level to take, just because we have this huge move off of it. 500 pips on pound dollar. That would be nice. So that's that. Let's check everything's recording okay here. Yeah, good. So pound yen. I am not currently touching yen pairs. The reason being is because I don't understand them. That's it. That's my full analysis. And I highly suggest that be yours too whenever you don't understand something. We are probably going to climb all the way up here. If we were to climb up there, I would take a trade, right? But we've been in this area now for a bit of time, this one here. But where we're currently sitting, I don't think we've been there since, 2008 was the last time. And if we were to push up higher, the highs that we had, it's July 2007. So, what does this tell you about where we are in the world right now? July 2008, and then we just had this enormous crash, the Western crash. Where obviously the yen strengthened, as it's often seen as a safe haven. But I don't want to go into that now. Let's carry on going through the pairs. So yen pairs in general, I'm just not really touching. I'm not interested in them. I had a notification go off on CAD yen late on Friday, and I just wasn't interested at all. Pound CAD, what have we got cooking here? I think more downside for pound CAD, just like the pound dollar. I'm expecting it to drop lower. This is a level for me. Still is. I've got a notification set here on TradingView that will notify me when we get close, and when we get close I'll assess it and decide whether or not it's still interesting for me. But until we get there, I've got nothing on pound CAD. Pound Swiss, I should still be in this, and if I was, I'd be taking a trade from up here, and I've got a notification set there, so that's my pound Swiss. CAD Swiss, I really don't trade the Swiss pairs. I look at them, but I really despise them. But if we breach this level here, probably going to be looking at that candle body close. Could be nice. So I can go ahead, set level here, to show you how I set my alerts. So I don't just leave it as it is. I just say CAD Swiss, near level. That's it. Now I don't have to watch it, right? CAD yen, this is the notification I got. So somewhere in here, if we drop down to the 4 hour, I'm sure there's a candle body close in there. Nope, it's going to be a 1 hour. This is the thing, you often don't remember what you did with your analysis. So we got this kind of move here. So I forget what they call that pattern now, but whenever you see that kind of thing, some kind of star, anyway. Shows how I use patterns. I don't at all. But yeah, so this is a evening star or morning star, something like that. But just a telltale sign that price was going to reverse. But we don't know that. We just had whatever happened in the past. But because we've got that strong rejection from this level, that's kind of where we're coming up to right now. So for me, I'm going to sit that one out because I don't like taking trades early on a Monday. Again, protect the psychology first before anything else. But I'll keep an eye on that one at least, and let's see if the move works. And I'd recommend you do the same if you're unsure about something. Just sit it out and write down what happened. That's it. And don't be mad at yourself if it worked out exactly as you said. Only be mad at yourself if you've written it down 100 times and it's worked out, and this time you decided you were going to write it down again. That's when you can be mad at yourself. But other than that, all good. So EA, also, same as GA, if you remember, at the top here. Interested in this level here, got a notification set, no more to be said. Pound CAD, Euro CAD. One of our members in the community was looking at taking some trades here. He had his first entry above mine. I explained why I'd be interested in the lower level, which was this one and not this one. But again, it was all to do with timing. ATR was there, but you have to also consider market conditions. Are we in a volatile market trading defensively, or are we in a particularly slow market trading offensively? I'm going to place a bet that this week will not be too volatile, I don't think. It just depends on what those speeches are that we've got coming up, so I will look into that in a bit more detail. But yeah, for me, first entry, that still seems legit. We had a strong move off of that before. The opportunity there is decent enough that it can be 30 pips out of that. So yeah, EuroCAD still stands for me at this level. Euro New Zealand, again, this is just fading down. Don't like that at all. This level actually worked. I didn't take this trade. Someone in the community did, which was cool. So he didn't take much off it because he managed the trade badly, but he took the trade and it would have worked out. I think it did like 70 pips or 80, yeah, 70 pips for the first area of potential struggle. So that was a nice trade. But yeah, I'm not interested in getting involved until we are down here now. So I'm waiting that one out. Because I believe that we haven't moved off here, we haven't made a higher high, so I don't think this is a reversal point. We're going to see it come all the way down. Euro Swiss, again, it's a Swiss pair. Not particularly fond of these. If I had to put a level on right now with a gun to my head, I'd say that will work, and if it doesn't, you could also take that as the backup. But yeah, could do some level refinement there, but to be honest, like, what is that, between the 50 pips? It's reasonable. But Euro Swiss has just been in this downward cycle. I'm not sure you'd get too much out of it, to be honest. It would have to be a really strong move. And just to knock my point home, this is a big day for Euro Swiss. That's 92 pips. If you had a move like that into the area, into the level, it could potentially work. I mean, look, here you had a big move in, and then price came and retraced about 50% or more than 50%. So there was 54 pips in that one. So, and it was nice because he breached this big wick, so it smashed through it and then pulled all the way back to it and used it as resistance. So that could have been a nice trade. So I wouldn't fully discount Euro Swiss. I'm just not looking to get involved until we're at least down here. So I will go ahead and put a notification on that. So we'll say that's near level. How are we doing for time? All right, so we're just over the hour. It's perfect, really. Euro pound, I don't trade. I don't know if I need to explain why I don't trade it, but I mean, the price action on this is like, looks like a heart rate monitor. So yeah, I don't. That's one of the reasons I don't like that. Jeez, euro dollar analysis. So this was to show you why I did what I did. Let's just clean this up so I can actually see through the mess. Take that off. It's a nice trade, this one. Paid well. Don't need that anymore. For me, that level down there would be nice. Got a notification set here. So we'll see with that. Euro yen. Again, we're at the highs with this. So as CAD yen's coming in, we've got a very similar situation. CAD yen's got that same wick. And I believe, yeah, I've got my level there as well, if you can see that. Just prices just breached it by 6 pips, but we've had no reaction. So we might get a pullback from it. But yeah, the other things I would check, I'm not going to go into in this video because it's outside of the scope and we'd be here all day. But yeah, Aussie dollar, I'm expecting this fella to continue to drop. If it doesn't, I've got my break even. I think, yeah, I've got my at the moment I've got my stop loss above here, because when the markets open at midnight or whenever it is in your time zone today, we will see some huge spreads in the market, and that's usually when the brokers tap on all our stop losses and whatever we've got set. So again, it's not a good idea to have stop losses set anywhere near close to where price currently is, because it's more than likely going to get tapped, and if that's a loss for you, it's a very unnecessary loss. So I would check that always on a Sunday before the market opens. Just move your stop losses out of the way on pairs like Aussie pairs, New Zealand pairs, yen pairs, euro dollar, pound dollar, and the more traded majors will be fine, but yeah, the other stuff you're not going to have a good time with. So I think we closed just above this wick here. Of course, I'd like to see more downward movement on this guy, and if we do, that's going to be the level for me that I get involved. You can see it's kind of pushed across here, and as a backup level, bearing in mind I've got the runner as well, so I've got 20% running. If we run all the way down here, what would be doing 60 pips, so nothing major, but still I might just cash the runner down there, or at least try a trade off of here. If it fails, let the runner run, cash a bit of it to cover the loss here, and that's about the only time I'm willing to just cut my losses on a more high risk trade. Other than that, I'm waiting for the stronger levels, but depending on how we get there is whether or not I take the trade. So again, if you are taking everything that I'm saying now as written in stone, you can't really. Just, I need you to understand that it's kind of contextual what we're doing here. It's not just like this is the price point where you can enter, unless it's like, you know, probably something like this you could, because it's a more significant level and strong. But to day trade, things move every day. But with that, if you want to be more involved, you can join the community, and then you can actually see what I'm changing during the day. Aussie Swiss, not really going to go into. I'll slap a level on that. No, I'm not putting the level at where the wick is. It's not about highs and lows. It's about where is the movement kick in from. And you'll see that time and time again. Not interested. So like even the daily, I'm happy with that being on the 4 hour with a pair like this, but I'm probably not going to trade it because I'd much rather have that or find a level within that wick somewhere. So it would be like there, and then you'd have to go down to the hourly to see if there is anything else inside that, which there is, and it's there. See that? So the 4 hour candle body close and the 1 hour, and the difference between the two is 50 pips. So that would be reasonable. So then all you need to check out is how price gets there. If price gets there, like if we had just 1 bar shoot down and it's way outside of ATR, I would take the first level. If we were closer to it during the day, I'm not going to take the first level, I'm going to take the second level, and I'll probably take it up to the first level. That makes sense. So that's how I'd manage that. Do I really want to know about a Swiss pair getting close to a level? All right, fine. There are just some pairs that I prefer to trade over others, but that doesn't mean I don't look at the whole market. In order to be a good trader, you need to look at the whole market. Aussie CAD, for me this level's done. I don't want to take another trade from up here. I've got notifications set here and here. That's not the level for me. That would be the level on the daily. And refining it, I want where price moved off of, and to be honest, it's not the strongest of levels for me. Like I want something to be super obvious, and it's just not. So I'd rather just see price move away from that. If we do see more weakness on Aussie dollar, we're likely to see Aussie CAD come down here, but we'll see. I've got a notification set there anyway. Aussie New Zealand, potentially some more upside on this one. If we were to get up here, definitely want to look at taking like up there. That would be nice. I've got a notification set. So, and I think, yeah, that's, for me, that's still where the level is. Even though price moved mostly off of that, I'd still probably wait for that, because that seems to be, although we're dealing with there, 10 pips. Yeah, so probably there. And we've not had a major pullback just yet. We just had this kind of like weird thing that we saw on Aussie dollar as well. See, we've got that arching thing going on. So Aussie New Zealand, I think more downside, but what I think does not matter, because what I think, I've got no idea. I'm just telling you, that's why I love this strategy, is that we move on pullback. So when we see price moving, we want to look for the pullback or the reversal. So yeah, Aussie yen, again, not looking to get involved in the yen pairs. If you compare this to euro yen and CAD yen that we've already looked at, and pound yen, the long wick here, we've actually, pound yen surpassed it, but euro yen and CAD yen are still within this wick. They're on the level, whereas Aussie yen's just like, gone, see you later. New Zealand dollar, I did have a trade on this a couple of weeks ago, which is why I'm monitoring this. I took from the top here, similar to my pound dollar trade, just happened on different weeks. I wasn't originally going to take a trade from down here, but because we've had all this messy price action around here, I'm not really interested in doing it so much now. So I would rather see price either move up for another sell at the top, or this level up here. But it's just, New Zealand dollar just looks a bit messy. There's also this up here somewhere. So yeah, nothing for me on New Zealand dollar really. New Zealand CAD, also had a trade on this the same week I had New Zealand dollar. So I got in here, and yeah, price went against me for a little bit. I thought it was going to come all the way back up here for a second go, but it didn't. It just ended up going straight into profit, which sometimes it does, which is nice. But also, if it does go against you, for me, I don't mind, because it's another opportunity to make more money. New Zealand yen has just drifted past, like Aussie yen. I'm not interested in that. Dollar yen is within the wick, like CAD yen and euro yen. Dollar CAD, either up there or down there, nothing else. Dollar Swiss, we've had the same move on pound Swiss in this, so you can see we've pushed up, probably going to push up some more. That is no longer the level for me. Would be something within this, probably this, probably that, because it's more recent price action. So that would be a drawdown, 30 pips, but you'd look for at least 50 off it, maybe something like that. And lower down, that certainly would be good for dollar Swiss. Setting all these levels on Swiss pairs. You can see how I haven't previously had them set, because I just don't want to trade them. Swiss yen is just doing its own thing. Yeah, not interested in that. Not trading metals currently, although I do mark it up. I'm journaling them, so I had this level set on gold from before, and it looks like it's worked. Yeah, but not much more to say on that. Dixie positioning, I will just say a few words on this. I think we're going to see more dollar strength this week, potentially positioning the dollar for weakness to come in. I think we're going to see the dollar strengthen a lot over the next week, and then towards the end of the week, and it being the end of the month, I suspect that we'll see these highs getting hit. And then we'll see some significant pullbacks, meaning some longs on pound dollar, Aussie dollar, euro dollar, the majors. So that's what I'm expecting to see just based on this price action. But what I think and what actually happens are two very different things. I just note that we're in this sort of channel at the moment, but anything can happen here. And again, I'm not trading the channel, I'm trading the levels, and we are coming up to a level. So we'll see. Stock market continues to rise up, might have a pullback here, but if we do have a pullback here, we're going to see more strength in the dollar, because when you sell stocks, what do you get? You get dollars. Same with the US 30. Not going to look at any of the others really. The Japanese stock market is up here. Yeah, if we hit a major level on the JP225, the Nikkei, then we might expect yen pairs to pull back. But other than that, that's everything I'm looking at this week. So I think I've done a pretty good job, if I may say so myself, of explaining what I did in the prior weeks, the trades I've taken, why I've taken them. I hope you found that useful in some regard. And yeah, also we're approaching 1 hour 15 now. So the only thing I've got left for you is, yeah, make sure you like and subscribe if this has been helpful in any way. And the only other thing I would do is, I did mention at the start that I would be giving a special gift. And that special gift is that I would like to introduce you to the Leveled FX trading community. So just say a few words on this. In here, I'm basically posting everything. You can see I've got my YouTube live not possible, which is why we're doing it this way today. But basically, yeah, everybody that's in here is getting access to me. We've got this community where you can ask anything. Basically, you can post general things, you can ask questions, you can post your setups, you can do confessions if you've made a mistake, if you're looking for feedback, if you're feeling hopeless because your trading plan isn't working, or something you've done or something you're doing and you're not getting the same results that I do. We post a Sunday analysis, which is this will be going in here as well as the check-ins. So every week on a Wednesday, we're doing a live check-in where I jump on a call with everybody in the community, and it's your chance to post your setups to me. Wednesday's a good day to do it. It's in the evening, Western time, Lisbon time, London time. It's I think it's 7 p.m, but you can check in the calendar once you join. So in here, that's it. The next scheduled one is right here, and basically, yeah, you can book onto that. So we're doing that. What else do I want to show you? The classroom is probably the most relevant. So in here, I've got the leveled masterclass. So if you want to learn to trade exactly how I do and why I trade the way I do, obviously I can't cover everything in YouTube lives. So if you want to know the ins and outs and the details and how to actually improve yourself, you can join Leveled FX by going to jamesdownton.com/free. The link will be in the description of this video. So that's jamesdownton.com/free. And it will take you to this page here where you'll just be able to click on the Join Now button. And right now it's completely free. So if you want to join, it's 100% free. And it's my goal to rid it's a big goal, but essentially I just want a whole lot less bullshit out there, and for people to understand what it truly takes to become a funded trader, where you don't need your own capital. You can actually go and take a challenge with a prop firm, and doing what I do and trading the way that I do, you should be able to pass and gain yourself funding. So I'm basically helping the guys in here get access to $200,000 plus in funding, where they get to keep 80% of those profits every month, and you're going through my system and learning in the style that I trade, which is, in my opinion, stress-free, extremely easy. You can do it 30 minutes a day and set your alerts. So if you're working a job, if you're doing a 9 to 5, if you've got other stuff that keeps you busy, good. You need that stuff to keep you busy, stop you from taking shit trades. But spend the time to do your analysis, set your alerts like I've shown you in TradingView, like how I do it, and your phone will trigger and tell you that something's come to a zone of interest. And when it does, that's when you can decide whether your analysis is still relevant based on what's happened today, how far price has moved, and how strong the level is. And if it's still there and everything still backs up, you can take the trade. That's it. Anything else, you discount, you don't jump into it, you avoid it, you look the other way. Don't get sucked into it. So all of that's available in the classroom. And we've got this cool thing as well where we do a leaderboard. So the members in here, by liking and commenting and helping each other, you can actually earn points. So for every like that you get from other community members on your posts or your comments, you actually level up. Level 6, I'm giving away free one-on-one mentoring with myself. And level 7, I'm actually giving away funded challenges. I'll probably start to look to do that a lot more, especially as I see people in the community leveling up and actually doing great analysis and having good results on their own personal live accounts or even demo accounts that they're trading. Yeah, so anyway, that's it. So if you're interested, links in the description of this video. It's jamesdownton.com/free. It's still all very new. This is all very new to me, but trading is something that I'm extremely passionate about, and I'm also probably even more so passionate about helping others to overcome the challenges that I had to. So anyway, hope you have had a good weekend, and after watching this video, it's my hope that you will be able to go away and maybe plot some of these levels on your own charts. And if you do, let me know in the comments. Again, if you have any questions, pop them in the comments below. I will answer every single one. And yeah, till next time. Thank you very much for tuning in.